Computer algorithms will create mass havoc in the next financial crisis. There is no doubt. How much of a role they will play in the events leading up to the crisis remains to be seen. It's an absolute fact that there have been many times where stocks have moved based on information that was simply incorrect. Since these programs operate at lightning speed, there's no way to verify the validity of the information they are trading on. This will be disastrous. You came here for the truth, so let me unveil that for you. We've seen the flash crashes that have happened throughout history in recent times. We've seen the books that have been written about them. It is important to understand high frequency trading and how computer algorithms are trading most of what you see today. It is not human beings. We have computers that are acting on information all based on some algorithm that most people simply do not understand. They're picking up data that might be true, it might be false, and they act upon it. Now that's fine if it's just one computer program doing that, but when one trips, the others will follow, and this creates a problem, particularly when everybody is rushing for the exit. So we have to pay attention to that and understand it, how that's going to play out in the next financial crisis. Stocks pop, then drop on fake news. I'm talking about real fake news here, not what you see in the media. What we're looking at right now is literally incorrect information that was traded on. I'll get into it right away. So CNBC went with a headline that was in fact not true. The little munchkin said, according to this headline, the US-China trade deal is 90% done. Then they corrected themselves. Munchkin, we were about 90% of the way on China trade deal, and there's a path to complete this. Initially, it said the trade deal is 90% complete. That is in fact false. That is not true. And the reality is that he never said that. So even though the interview is right there, they were acting on this information as if he said it. And of course, stocks reacted accordingly. Here you can see, Munchkin, we are 90% done. Stocks rise much higher. Munchkin, we were 90% done. Then stocks dropped as a result. Here you can see the reaction in the markets. They are right now in the positive territory. They've been acting a little interesting today as a result of the information. They went up so high, then they came down. Everything right now seems like it is very much relying on a Fed rate cut in July. That's what they're waiting for. The trade deal, we're always getting some news. They always roll out the little munchkin every so often to ensure that the markets are constantly staying pumped up. They get Powell out there to say that everything is just fine. Well, we've been here time and time again. So it's not just this particular occurrence with CNBC and the munchkin. Here, this is from June 19th. We are looking at New Zealand. Reserve Bank keeps interest rates at 1.5%. That's a fact. That's what happened. However, we had this particular company that posted this tweet. Breaking, New Zealand Central Bank lowers the cash rate to 1.5%. Previous was 1.75%. This information comes out. The algorithms trade on it, and of course, this flash crash for just a few seconds happened to really break the systems. The information was not true, but the algorithms traded on it as if it was. Now, again, you can see how it comes up higher after, no big deal. But when you have a bunch of people rushing to the exits, that's when you have an issue. When there is maximum liquidity, you don't have a problem. However, when you run into these times when everybody is panic selling, then you are going to be in trouble. Things will fall much further. They are going to have to halt trading. Then the trading reopens at a later time in the day or maybe the next day. Then it falls again. Then it will react. And it will be a cycle that will be very detrimental to the portfolios of a lot of people. High frequency trading and all of these computer algorithms are a very big mistake because they do not have the ability to discern what is real and what is not. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like, you are supporting me, so I do appreciate that very much. If you want the financial education you were not taught in school, these 2 books have everything you need, all the details from A to Z, the foundation, the history, the asset classes, all of what you need is in these 2 books. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. Wait a second, hold on, don't go anywhere. You got to watch this video. It is very important, connects in with this issue here. Click on it and I will see you there.